What's up, everybody? We are back for our Tuesday stream. A little bit early this week, but you are here, and we're ready to go. If you guys got any tickers you want me to look at, just drop them in the chat early. And as soon as I cover a few of the things I want to go over today, we'll get to as many as we can. We do have until 7 o'clock. But I'm going to start out, and if you guys could, if you have a request, smash the like. It just kind of helps the algorithm a little bit, and it helps spread this stuff around. And maybe we'll get some extra people joining us this week. But I wanted to start out here. I've got Bitcoin pulled up, right? This is one we've been covering for a while. Since we've been doing this stream here. And one of the things we've talked about over the last few weeks is the Wyckoff accumulation. Now, basically, this is a schematic of what the Wyckoff theory, how it presents itself on a chart. I see a couple of you guys on here. We got a few requests. A few of these I like. We'll get to those real quick. I just want to bring this up because this is the crucial point that kind of makes or breaks this schematic. If this is what we're looking at, this Wyckoff accumulation, you see we've got that initial drawdown, your sell-off, your correction, whatever you want to call it. And after that, you get this sideways action. And the theory behind the Wyckoff accumulation is, this is where the asset is reaccumulated, obviously, hence the name. But in the process, this schematic will fake you out a couple times. It's the whole composite operator theory. It's a way of protecting itself. This asset protects itself against leverage traders, against people taking short-term positions, and ultimately in the process, during this accumulation, it shakes out a lot of people before ultimately marking back up. But I've got these vertical lines here that really break it down for you, right? We've recognized our correction. We've recognized the sell-off, and that's phase A. If you see on this chart here, you get the drawdown. You get this initial spring, which we've gotten here on Bitcoin. We sprung back up, we came back down, which essentially, if you were taking a long here with leverage or with a tight stop loss, up in this zone here, you're going to get knocked back out of that real quick. And then you've got a higher high, which I guess your drawdown, your spring up, and we made a higher high than this high here on May 22nd. And then now you don't necessarily have to make a lower low here in phase B, but essentially it's the same thing. Once you get into phase B, you come back down, retest some of these levels here, which we did. You see we've got this level here, and then we did make a lower low from that previous low that we were looking at back here. Now, according to the schematic, you're going to get a move back up, which breaks the supply line coming down from phase B, but ultimately draws back down underneath that low you got here on phase B, which again, your phase B low here, you broke the supply line coming up, but then you drew back down, and you come into C, which is resting on top of support that you had developed in phase B. In the case of this schematic, a little bit lower, and then phase D, which is, according to the schematic, that's where we would be right now, where you get a spring back up, which is going to break these peaks back here. You get the consolidation sideways before, and you could almost call this, a bull flag of sorts. After the sideways action, the consolidation off of that high, you're going to get phase E, which is the markup stage. And if we're looking at Bitcoin here, we got our spring, We've got our sideways consolidation. And again, if you were looking at this as a bull flag, you know, you'd have essentially a 100% measured move of the pole, which would put us up here in the 45,000 zone. And if we look left, I mean, we've got this peak here for May 18th, which is also confluent with this consolidation here back in February, and you chopped around a little bit in the same area. So that wouldn't be outrageous to think, you know, we're going to go retest that zone again after that massive drawdown, right? But the more important part of that is the fact that we are going to be breaking, if this plays out, we're going to be breaking this super strong resistance zone back here from January 8th. You know, we chopped around in this 39 to 41, 42 zone a lot before we eventually marked up. And again, you know, if we look at the price action correlation of that zone, you know, once we broke back above that, it was straight up to this 47 zone, and then we came back down to essentially the zone that we were talking about, you know, that this bull flag leading us to, which would put us well above this critical resistance. This is like an inflection point. This is what we're really looking for on Bitcoin. And essentially, once we break that zone, you're probably going to get the same thing we always look for. You get the spring above resistance, and then the confirmation back down to that zone, but not as resistance. We'll be testing it as support, and that's where you'd want to take a long position. You want to see the resistance broken. You want to come back down and make sure that it is now support. And that's going to give swing traders, position traders, that's going to give them the confirmation they need to take a long position outside of this zone. You know, we've been chopping around inside this zone. We did call out, you know, after this second bottom down here, you know, we made that higher low, which implies the accumulation had started in this zone. And since then, we haven't broken it. In fact, we have tested it once and now twice, putting in a double bottom at that 31 zone. And since then, we've been marking up, and we've broken this supply line that had been coming down off of that correction. So if this plays out, I mean, we could be looking at a pretty substantial markup for Bitcoin really soon, but you want the confirmation. You want to see that resistance broken. You want to see it retested as support. And ultimately, once we do that, you know, you're going to want to put your stop loss underneath this consolidation here. If depending on what your target's going to be, you could put it a little bit lower. You could put it underneath the spring. And if you did do that, you'd be looking at about 15% would be the drawdown on there. Personally, I like underneath the consolidation, which would put you at about 6%. But if you did that at 15%, that would give you room for a 3-to-1 trade. Ultimately, I mean, if you were going to have a 15% stop loss, you're probably going to want to aim back up here for C and D, or C and A, which would be a target of this deep crab formation that we've been looking at the last few weeks. But again, I generally, you'd want to just stick your stop loss underneath that consolidation zone. We do have a bunch of requests. I'm going to start going through these one by one. We'll see how many we can get to, and I know I like to talk a lot. I'm going to see if I can move these along a little bit faster. VFF has been one that we were looking at. I was looking at personally earlier this year. And just right off the bat, I cleared out my chart here because I want to go through this with you so you get an idea of how I'm charting this. And first thing I'm doing on the weekly here is we're looking at some of these major peaks, your major swing highs, historically, because that's stuff that's going to be referenced with current price action too. And right now, first thing I'm seeing is we've got a nice drawdown, which is something you want to look for when taking a swing trade. You want to get into those value areas. Just right off the bat, I'm looking at this support and resistance at 884. It looks like that's a zone that we have retaken as support. And what we're going to do from there is we're going to move down to the daily chart here. We're going to give ourselves a fib retracement, say that's going to be our low, a fib retracement from the low to the high. Just disclaimer, I do have these reversed. Normally you'd do it the opposite way. But if this is our new support down here in that 830 zone, you know, we've got a spring. And what I would be looking for from here, off this resistance, you want to find new support. You want to find new support coming in. And we are in after hours trading, but I would like to see VFF hold up that 10-12 zone. Because if you look back here to the left, you do have some old resistance and support developed in that area. So you got your spring. Now you're going to want to back test for support. And if we're looking at the daily chart on the MACD, sorry, 1 second here. On the MACD, you've got this positive momentum still waning, still coming down a little bit. So that does confirm, you know, exactly what I'm saying, that we're probably going to come back down and try to find some support off of this spring. It has had a nice little run in the last month. And if we're on the 4-hour chart here, the 4-hour kind of confirms the same thing. You know, we got this sideways consolidation. You still have your negative momentum building on the 4-hour chart, which tells you that that sell pressure just hasn't let up yet. But if we were looking for a confirmation that this correction is in fact going to, or the upward momentum is going to continue, we want to see that negative momentum on the 4-hour chart start waning a little bit. And if it does, and we start to go back towards positive on the MACD, that would give you bullish convergence, which basically is just a continuation confirmation that says this upward movement after it consolidated is going to continue. And the same thing on the RSI. You're probably going to want to wait for this to start to approach these oversold areas that we saw back here the second week in May, which again would be a great entry once we do develop that support, once we get into these oversold levels on the RSI. But ultimately, if we go back here on the daily chart, I think your target on this asset next, you know, if you were looking at this, if this develops into a bull flag of sorts, your 100% measured move is probably going to bring you back up into this 1347 zone. And that is a major inflection point. If you're looking at historical data, you see we've got a lot of resistance back here in January. You came back down in March, tested it as support. And then once again, once it broke down underneath that, you did try to test it as support again, and you got rejected. So ultimately, I think that's where you're headed. But you do want to wait, because this could come back down a little bit further. You could come back down, you know, I would have got a little bit of resistance here at 981. I wouldn't be surprised if it came back down to those levels, but you want to wait for the confirmation. And ultimately, that's probably where you're headed. You probably step your way up to 1255, 1347. And then the top of that zone, you'd probably be looking at, 1434 maybe for VFF. Clove's one we talked about a while ago. Down here, which is a better spot for Clove, but it does look like we're starting to come back down to some possible support levels here on Clove, right? The daily chart still shows that positive momentum waning after spiking up into this overbought area. Even the RSI and the daily starting to come back down. It looks like we're still in just about bullish territory on the RSI, but you do want to see this curl upward. And you do want to see support gained here. I'm going to move over to the 4-hour chart, which looks a little bit better for the cause. If we pull up the MACD here on the 4-hour chart, you've got this big old negative momentum island that has started to wane. You're starting to move upward. The RSI is down to a reasonable level, just about neutral. Clove's going to be a tough one to make any calls on right now, but if we move to the lower time frames, it does look like this 1335 area has been holding up as support. And I think if we look way back here in the fall, September 17th, that was an old resistance, and then tested as support and then resistance. So I would think around 13 bucks, maybe a little bit higher, maybe as high as 13.50. That's probably where you're going to end up finding support. And it looks like we've kind of started to, right? You got a bunch of these wick lows down in the area. And on this 30-minute chart, if we're doing something a little bit more short term, we do have confirmation. You got a lower price. And then if you look at this MACD, you've got less negative momentum, lower price. The MACD is starting to move positive. That would be your bullish divergence that you're really looking for. But again, you got to realize this is a 30-minute chart. You want to see some more confirmation on some higher time frames, but it's a start, right? And obviously, after being blown up to about $28 not that long ago, you're at a real significant discount. If we do develop some support on this asset, you're about 50%. You're down about 50% from that 28 level. So you'll probably start to test some of these levels back on the way up. This one sticks out to me, this $17 mark, because of this resistance we had in December, end of December. A few times we hit it. That would probably be the first place I'm looking, right? Because if you look historically, once we broke that $13 zone on Clove here, first thing we did is ran straight up to 17 bucks. If we do find support there again, I would not expect the outcome to be any different. Tesla is the next one we got here. And I'm going to zoom out a little bit. Tesla is one that we called out, about a month ago, right? Hasn't done a whole lot since. But if you look here on Tesla, we had this bullish divergence. You got the lower price, less negative momentum at this point, at this 552. So as far as Tesla goes, that's the support I'm watching. And since then, we got our spring. You got your initial reaction off this cipher harmonic. You came back down and you put in a higher low, which implies that more traders own this asset. You do have accumulation taking place. And not only that, but we had this supply line coming down on the harmonic. where you can see we kept hitting resistance, hit resistance here again. And what we've done is we've broken the supply line on Tesla. And now it looks like it's coming back down. I know a lot of the tech market has dropped, has had a correction today. But if you look at the significance of where we're at, you got that resistance here, you're coming back down, and we're testing again what was once resistance. Hopefully we're testing it as support. Before I get out of there, on the daily chart, you do have this positive momentum starting to wane. You know, obviously this candle is still active on the daily. This could change. You got about an hour and a half. But regardless, if we move over to the 4-hour chart here, that'll kind of give you a better idea of what's going on. So right now, if we were looking at, you know, a trend on Tesla, we're still above this trend going up off of this harmonic completion. We've had some bearish divergence on the 4-hour chart, and that's what we're dealing with right now. But if we do find support around this $600 range, realistically, anything above 573, if we do come back down and test this trend line again, we are still putting in the higher low that we want to see. And at that point, you could start to argue that you've kind of got this ascending triangle behavior, right? You've got a supply line, you know, and essentially the idea behind an ascending triangle is you keep making them higher lows. You keep absorbing the supply at this, about 615 level, right? Resistance, we broke above it back here at the end of May, but we got rejected pretty fast. We came back up, tested it. You know, again, you're absorbing the supply. There's obviously some sell orders in that zone, but as long as you keep making higher lows, eventually all of that supply is going to be absorbed and you would see a markup phase. So with Tesla, I would probably be looking up here to 672 to 695 is our first zone that we would retest. And if you wanted to look at, you know, the 100% measured move of this spring, that's where it would put you, right? So that's what I'm looking for. Tesla's, it's important that we do get confirmation of support. As long as we make that higher low, that'll give the oscillators a little bit of time to develop an edge on this asset. You want to see whether it's, you know, convergence, you know, higher low on price, less negative momentum. That's what you would want to see. And obviously on the daily chart, you still got a lot of room to move on the RSI, but at the moment we're coming back down. We're testing some levels. This could take some time, but ultimately, as long as you're making the higher lows, and ideally you want to see a higher high. Right now we haven't made that. Same thing, Tesla. I do think, you know, if we do see a markup on Bitcoin, not that Bitcoin's going to move this asset significantly, but it is an asset that I think psychologically, you know, like your Mara, like your Riot, like Square, PayPal, all those assets, when Bitcoin does good, you're going to see them assets perform well, generally speaking. So I would keep an eye on Tesla. I do have a position in Tesla, and I do consider this still an active trade setup from this support, from the pattern completion zone of this bullish cipher. GOEV. This is one I was looking back a while ago, and this is what I was eyeballing here, right? All the way back to December, we've been consolidating off of these highs. You are forming this potential, and I think you might actually have confirmation of this falling wedge, right? Yeah, With a falling wedge, you want to see 5 touches. You got your 1, 2, you have broken out of it. And essentially, the way you want to look at a falling wedge is if we were doing a measured move, you're going to want to take your high to the bottom and basically copy and paste that at the breakout. One second here. And essentially, if we do see the measured move of this structure here, it's going to bring you right back up to that high, right back to $22. That's strictly off the measured move. If we pulled a fib retracement on this asset, and then just looking here at some historical data, we don't have much on the way up, but you know, we've got this consolidation here, this resistance back here in March. I'll probably look to that 1580 mark for a retest. It looks like it's in a good spot right now. If we move over to the 4-hour chart, might be able to. Oh yeah, see, you've got this resistance and support here at 1029. You got support, resistance, and we are back above that. And as far as I'm concerned, that's very positive for this asset. On the 4-hour chart, we also had this. We had this hidden bullish divergence, which is a bullish continuation identifier. It implies that at this point where we had that bullish hidden bullish divergence, that move up was going to continue, right? And if you look at this volume, that's incredible volume. I didn't notice that till now. I mean, that's some pretty good confirmation that we're going to be testing some higher prices. And 1580, that would be the first logical place I would look to for a target. I do like this 1750 zone. We got support, resistance. Obviously, that's, you know, just looking at historical price action, that's an area that we would probably retest. And if you look at the price action correlation between those zones, once we get above this resistance, which we are, historically, what do? We go straight up to 1580. If we look back here in the fall, as soon as we got that confirmation of support, we ran up to about 15 bucks, came back down, confirmation of support once again, and then again straight up to 15, 1750. That's where I would be looking, as long as we do hold that 1029 area. Yeah, about 10 to 11 bucks. As long as we stay above this zone, I think you're going to start testing some higher levels, and that would be where I would put my bets. Whether it's 1580, $14 would be another significant level too. But ultimately, I mean, if you're really aiming for a home run here, you know, just the breakout of this this structure here would imply a possible retest of I think these are all-time highs for Canoe. That's where I would look. If we fell underneath, you know, this spring here at about 940, I would be worried. Once you break that resistance, you want to see it held as support to confirm that we are on the way back up. This is a very long correction. You know, we're looking at all the way from December, you know, about 6 months on a correction there. So that's how I would look at Canoe there. Unity's one I was looking at a while back as well. That fell out. You know, we had a trade back here that ended up getting knocked out here in the end of April. But let me clear this out. We'll go right from the. All right, so the first thing I'm seeing on Unity here, all right, we got this resistance back here in September. Resistance, you know, we did break above it, but we held it, actually, we held it twice as support in November and then again in February. And then it was once again resistance, but right now we are above that. You don't got a lot of support here on the MACD, on the daily chart at least. It does look like you're losing some positive momentum. Same thing on the RSI. You are headed back down. And if we're looking on the 4-hour chart here, same thing. This isn't something that I would take a trade on right now. Personally, what I would want to see is I would want to see confirmation that now that we've broken this resistance here from the end of May, you want to see that spring and then the back test. Once you get that back test, you know, this MACD might have some time to start losing this negative momentum, start heading back positive. Same thing with the RSI. If this RSI starts heading back upward into bullish territory, that would be your confirmation of support. And if I was looking, I think even you could even come back down to 95 here and I wouldn't be too concerned. I would still look at that as a back test of this support because you got this resistance and we're sitting right in that zone again. For Unity, if we get confirmation of that resistance being support, I would start to look up. It's a real choppy asset here, but I do like, you know, we'll probably come back up here to 105, retest that on the way up. Again, that's if we get support and confirmation above these levels. And then I mean, I would just with this one, what I would do is just walk right back up all these levels one by one. I like 105.80. I like 114, and then this one. If we're looking at major inflection points here, I would think this one's going to be pretty important. Up here at 137, right? Initially, you got that candle close back here on the daily in the fall. Then you tested it as support, tried again, and you got rejected. I would think, you know, looking at this price action correlation, once we got support back here in November, we went straight up to 137. Once we got rejected, we went straight back down to where we're at right now. So if we can get confirmation of support again, first thing I would, you know, I just looking at the history of this asset, I would expect we're probably going to make our way back up to 137, and that's just based on historical levels here. But as far as an entry, I would wait for some confirmation. Right now, it does look like you're still, you know, at least going sideways, retesting some of these lower levels here. CPHI, this is one I'm not familiar with, but we could take a look at it all the same. This is another choppy one. Stuff like this, these big old wicks worry me. But if we're just looking at levels here, historically on the daily chart, I like this one, right? At about 70 cents, you've got some wicks back here to 70 cents. You do have, I like this this area back in March, you got a few candle close tops. Same thing in June of 2020. Same zone. It looks like you're putting in a lot of attention to that zone. And the good part about that is, you know, off these lows here, we touched down to this 55-cent zone. Once that asset retraced back down to 55 cents, that's when your buyers came in, right? You had lower prices, less negative momentum. That's your divergence. That's implying that 55 cents was the bottom. But since then, you got that spring, that initial reaction off this asset. You came back down, and the positive part of that is you retested this old resistance as support. And as long as you stay above 69 cents, you're probably going to start working your way back up. And if we toss a fib retracement on here, you know, we almost came all the way back up to the 786 off that retrace. I would probably keep my eye on retesting that level once again up at about $1. That does look like an important level if you want to be conservative. You got these candle close, double top at 98 cents. That would be my first target on the way up, personally. And if it really gets going, you can keep an eye on $1.24. But I would take it step by step. This asset does look like it wants to move a lot. You do have a lot of heavy wicks. So if I was taking a trade on this asset, I would definitely set my targets ahead of time, because it looks like once they get hit, you know, it's moving fast. So 98 cents, probably where you're going to head next. And after that, 123. If it does end up breaking back down, I think you're going right back down to 55 cents. So if I was going to put a stop loss on this, I think anything under 67 cents, probably the danger zone. You probably go right back down to 55 cents. SHLX. This is not one I'm familiar with either. Helix Energy. I do like the sector right now. I can give you that much. All right, so it's not in a bad spot. Well, I'm looking at here at about 545. You've got a lot of chop. You got a lot of correlation of that zone between 530, 545, right? Back here in 2015, we're on the weekly chart. Keep that in mind. But if you look back here, once you broke above that, you ran all the way up here to about 1142. Came back down and tested it once again as support after being tested as resistance. After you got that confirmation of support, same thing. Sprung up, back test, and then you were right back up here into this $11 zone. And you could see straight up, straight down, straight up, straight down, straight up. And then that's when you got that nasty fall off. It looks like that's COVID crash is when you came all the way down here to 99 cents. But ultimately, if you were looking to take a trade on Helix, as long as you stay above that 531 zone, I think you're in good shape. Looking at the weekly MACD, you've got bullish convergence, implying that, you know, this asset is going to continue this bull trend upward. You're still building positive momentum. The RSI is not overbought yet. The daily looks like you're cooling off a little bit, but then again, that's kind of what we're expecting, because you got your spring above resistance. You want to see it back tested, and that's probably that could be what's going to happen. That doesn't mean it's going to, but if you're using traditional technical analysis, you know, that's something that traders want to see. Once you break that support or that resistance, you want to see it back tested as support. On the 4-hour chart, 4-hour chart kind of disagrees, right? Because you still got this price moving up. And then if you look on the MACD, even though that price was moving up, you were still building negative momentum, but that's hidden bullish divergence, which is a continuation indicator that says at that zone, right, at this zone we're consolidating in, the bullish trend is going to continue. And if we're looking at the 4-hour chart here, you've got this nice piercing line reversal at 593, and it looks like this MACD is about to go positive. So you might get a short-term run up here. And if we were looking for targets on the way up from there, obviously I wouldn't want to count out. You've got some resistance at 685. Very well could be tested as resistance again. But if we were going bull pull, bull flag, you know, you could be looking at the measured move of the bull flag would bring you right back up into this choppy zone here. You know, historically on the daily, we might have a little better luck finding this resistance part here. Yeah, I mean, I'd be keeping an eye on that $7 area. As far as that flag goes, you know, that could bring you up into the high $7 zone, and then you're gonna be seeing a lot of chop, a lot of stuff you got to work through up here. But you're sitting at about 624 right now. That's going to bring you up to about 750. I think that would probably be the sensible target on the way back up for Helix. Where are we at? 113, taking a chance, FDA approval. SPPI, Mike, I got you, buddy. Oh yeah, this is. Well, if you're looking for anything, you said bad signals on the chart. One thing to keep in mind, this is a pretty illiquid asset. You're looking at about 650 volume. I do like the fact that the average volume is over 1 million. That's kind of where I like to keep. I like at least 1 million volume. But it's low volume today, and it does look like this is going to be a difficult one here as far as traditional technical analysis goes. You don't have a lot of information. The way this asset moves, I don't think I'm on the right asset, am I? PPI, that is not the one. All right, well, we're going to try that one over. This one looks a little bit better. All right. I hope I didn't scare you away, Mike. All right. Yeah, there. Okay. All right. You're on to something on this one. You could be. Give me 1 second here. All right, so we're going to rewind real far back for this one. All right, so we are sitting at about 425. Now you got to understand your time frame on an asset like this, because it's very range bound. This is an accumulation structure. I mean, this has been going on for quite some time. I do think you're probably eventually going to see a markup on this, but looking at the history of this asset, it might take a news driven catalyst. But as far as low risk zones, I mean, you're at it, right? You're right about at the bottom of the zone here that you've been in for quite some time. All right, so this is the zone I'm looking at, right? You've got resistance back here from all the way to 2002. It was acknowledged again in 2008. You know, you've had all these springs, all this momentum upward. You got up as high as $25 on this asset in 2018. And then you're right back down to that zone, but you're above it, right? It was resistance. You sprung back above it. And it looks like that's probably the COVID crash. Yeah, March 2020. Sprung back above it, and now you've back tested it, and it looks like from that point, we're going to move to some lower time frames here for you to get a little bit more data. And you kind of got this XABCD thing going too here, which I want to take a look at. I didn't make a mess of my chart here. Bear with me. So I'm looking at it like this, right? This is where you want to look for harmonics too. You got the drawdown, you got your initial impulse up, your correction, and then you've got your pattern completion zone, which is right here at D. And again, that's above that old support. If I was looking for targets on the way up of SPPI, probably looking to retest this $5 zone. But what I had pulled up a second ago is you've got this bearish harmonic too. And this is a bearish cipher. It's the bullish harmonics are kind of shaped like an M. And the reverse of that, a bearish harmonic, would be shaped like a W here. And it looks like, you know, that would have been the pattern completion zone. And it does look like you are correcting off of that a little bit. And on the daily chart, your MACD says the same. You got this positive momentum waning. You're overbought on the daily. So that implies you're probably going to come back down. If I was looking for an entry on this one, I'd probably look for this asset. It looks like you got this resistance that was being respected a few times here back in January and February and March. You might not make it all the way back down if the momentum picks up, but that would be a nice argument for an entry, right? If you come back down, you retest this $4 zone, and again, you could be conservative. You might end up, you might be able to consider that the back test, right? Because this wick high up here and back here, you know, maybe that's the zone you were retesting. But I'm going to move to the 4-hour chart. And both the daily and the 4-hour chart looks like you're probably coming down a little bit further. So I would keep an eye out down here by $4. I think we might have another leg down to retest 396. but you are, from where this asset's been, I would probably be looking for a target up near $5, right? If this was a nice bullish harmonic, you're probably going to come test the top of this range one more time. Now, if you break above this zone here, that's where it would get real interesting for this asset, because your next major level up from there, you're probably looking up near $8, right? If you look left here, you got a lot of price action correlation to that zone. You see back here in 2009, once you've sprung above that resistance, you went straight up to about $7.65, $8, and then same thing. Once you broke it, you came right back down and then right back up, and then same thing over here in 2020, right? Once we broke down underneath that $7.65, $8 zone, you went straight back down here. So you would think, as long as this asset keeps making higher lows, it's starting to make higher highs, I think your target eventually is going to be $7.65 in time. This could take a while to play out. It could end up taking just a little bit of time, just from news-driven catalyst. Pharmaceutical plays, anything in the health technology, biotechnology industries are very volatile, but it's on the right path. I'll give you that much. You just want to see confirmation of support. And even if it drew down a little bit further, as long as you keep making higher lows, I think you're eventually headed up to 490 and $7.65. And then we've got Parker, ADTX. I did take a look at Clove. I'm not sure if you were here for that, Parker, but we did take a look at that one for you if you want to rewind. I'll take a look at ADTX, another therapeutics one. Same disclaimer I gave on that last one we looked at. All right, so ADTX, same disclaimer. Pharmaceuticals are a tough play. They can get anything in the health technology, biotech. That stuff it can be volatile. It can be very rewarding, though, if you know how to play it. That's something I would definitely keep up with the news on this one. But just like I said a second ago on that other asset, the wrong one I was looking at, this asset has only got about 125,000 volume. It's very illiquid. That's something you want to take notice of. It's very easy to drive this asset up and down with that little volume. But if we were going to break this one down, this one's really, really choppy. You got a lot of scam wicks in there. So we're going to move up to the daily chart here. And same thing, you're at the bottom, you're in this lower range here, which if this is something you were accumulating, if this is something you were taking a longer term trade on, this is where you'd want to be accumulating, because this major inflection point here at 310 is still being regarded as resistance. And until you get above that, this is a big range. You've got 310 all the way down here to, I think your next support down is about 228, and you're right up at the top of that range. So if you were taking a trade on this asset, I would wait for some confirmation, because right now on the daily chart, your positive momentum is waning. It's still making its way down. Same thing with the RSI. The RSI is starting to fall off a little bit. Which could imply that you're going to come back down and retest these lower levels here. If we were looking at a more local target, maybe 264, looks like we broke above that resistance and we never came back down to test it. That could be a nice place to keep an eye out for. 4-hour chart, saying the same thing. You still got some negative momentum building. RSI had a little bit of bearish divergence, and it's looks like it's trying to gain a little bit. You kind of got this tail hooking up here on the RSI, but until you see some confirmation of support, I would personally wait for it until at least the oscillators are agreeing with you for some higher targets. If we were looking at targets on the upside, though, on this asset, once you break that 310 zone, I like 380. Looks like you got some correlation back here historically too. Above 380, you might be able to pull off 459. And with an asset like this, I would just keep working, keep watching these levels on the way up. Just looking at this price action though, yeah, 310, I would want to see it break that or start to move up off support. And after 310, it looks like you could very well come back up back here at 310. You went straight up to 459, and then again at 310 back here in February, you went all the way up to 523. So I don't think it would be strange to retest some levels if you do break 310 and hold it once again. Unity X. All right, I see a lot of, we got a lot of requests today. I'm going to go through. I see a couple that were mentioned a few times. Let me get to those. Doge being one of them. Doge is one we've covered for a while on this stream here. We're just about out of time. This might be the last one. If you guys want to hit me up on Twitter at Trade Nomadic, I could probably get to a few more of these tonight. But as far as Doge, I still like how we're looking at with Doge. It's the same type of thing. We're getting, higher lows. We're still doing it. It shows that we're accumulating. And, we do have a couple nice harmonic patterns here, possible harmonic patterns here that have been developing a little bit. And same thing, we're probably waiting for confirmation on Bitcoin, but if Bitcoin starts to make another move up, a lot of the crypto market's going to be moving. A lot of the crypto market's primed right now. We do have a couple trades we've been looking at. Bitcoin is one of them. Doge is one of them. You're seeing a lot of the same patterns. They're waiting. They're waiting for that confirmation. Doge, if we do end up catching a rally here, which it looks like we might have some convergence forming on these lower time frames. I like this 41 zone. I like Doge. It looks like it steps up about every 10 cents. If we hit 41, your next zone up from there is probably going to be 51. You got a lot of correlation between that zone. And it's just something to pay attention to as Bitcoin moves up, the same as the rest of the alt markets. They all move with Bitcoin. Bitcoin's, moving sideways. Bitcoin's moving down. They're all going to suffer in the same fashion. But I know these guys got another show coming on at 7 o'clock. So if you guys want to hit me up on Twitter, if I missed anybody, feel free. Otherwise, we will be back next week. Generally 7 p.m. the time we do this. So